Good afternoon, everyone. On behalf of Committee on Members in Industry and Business of Institute of Chartered Accountants of India, I, CM Manoj Garg, warmly welcome you all to today's webinar on four of CGST Act and relevant provisions to claim valid ITC. As a moderator session, I am delighted to see such an enthusiastic response from our members for this webinar. Committee on Members in Industry and Business of ICAI has taken significant initiatives for the benefits of members. To name a few, such initiatives are campus placement programs, CFO meets, awards, industry excellence awards, roundtable CFO meets, and various other webinars and workshops organized successfully over the years. The CMIB committee is dedicated to addressing the interest of chartered accountants in industry, and it strives to provide a platform for knowledge sharing, networking, and growth. Today is one such webinar, which is today. Today is one such webinar, which is a significant step towards CMIB's commitment to providing continuous professional development and updating our members on the latest developments in GST. With the increasing scrutiny of GST authorities, it is essential to understand the nuances of show cause notices and relevant provisions to claim a valid ITC. Our expert speakers for today will guide you through the complexities of Section 73 and 74 notices and share practical insights on understanding the show cause notices under Section 73 and 74, methods to claim valid ITC, and its relevant case laws and updates. After the session, you will also have an opportunity to engage with our speakers through question and answer session. So please feel free to post your questions and we will do our best to address them. So without further ado, I would like to invite first speaker of the day, CA Mohit Gupta ji, to begin with the topic. So just to give you a brief about the speaker, CA Mohit Gupta is a qualified chartered accountant and lawyer having rich experience of several years of working in top taxation firms like Apran, Lakshmi Kumar and Sridharan. He is a founder of Anivesh Legal. He has a dedicated experience in indirect taxation advisory and is a co-opted member of Indirect Tax Committee. He's a two-time rank holder of CA Institute examination and has been actively involved in various conventions and conferences of ICAI. He has been advising clients in wide range of indirect tax matters, including GST, service tax, customs, foreign trade policy, government incentive, and legal metrology law. He has been worked with clients in various sectors like real estate, infrastructure, airlines, automobiles, consumer durables, FMCG, etc. He is regularly appearing before appellate authorities and tribunals. He regularly writes articles and is a GST training faculty of ICAI. He has been giving seminars and webinars across various platforms over the years. He has given various training sessions in corporates and trained professionals. He has also co-authored various topics under GST, service tax, and VAT. So I would request CM Mohit Gupta ji to take that and start his session.
Thank you so much, Manoj Garg, and I would like to express my sincere gratitude to ICAI and specifically Committee for Members in Industry and Business for giving me this wonderful opportunity. I think any opportunity where we get to express our views with our fellow professionals, that is too good to pass up such kind of opportunity. So with this, without any further ado, we'll start our session for the day. So first of all, we will be covering relevant provisions to claim valid ITC under GST law, and then in provisions regarding section 73 and 74 will be taken up by Rajiv Agarwalji in second part of the session. So friends, I think ITC is one of the most important topic in GST. If you ask me, there are multiple topics. There can be taxability, there can be time of supply, there can be value of supply, there can be place of supply, and every aspect has a lot of litigation involved, no doubt about that. But the most litigative topic across all the GST law, I would have to say ITC, because the most number of litigation, most number of issues which you see is always in ITC. So, ITC, our topic for the day is relevant provisions to claim ITC. So, the relevant provisions to claim ITC are given in section 16 and section 17. So if I see section 16, which is the main section which governs the eligibility of ITC. So section 16 subsection 1 talks about ITC eligible on goods and services which are used or intended to be used in course of furtherance of business. And then we have subsection 2, which now specifies 6 conditions. So earlier, when it was introduced in July 2017, that started with 4 conditions. Now 2 more conditions have been added. So possession of tax invoice, tax paying document, detail of invoice or debit note has to be furnished by supplier in GSTR 1. The goods or services should have been received. ITC has not been restricted under section 38. Tax has been paid. Return has been filed. I think almost all of us have gone through these provisions and in very thorough detail in past 7-8 years since GST has been introduced. So in today's session, we will be focusing more on the litigation aspect of ITC. That whenever, as a professional or as a client, whenever you receive any notices from the tax department relating to ITC, then what are the specific areas or what are the specific issues which are raised by the department generally, and how do we have to tackle those specific issues. So our session will be more focused towards that, as well as the recent amendments which has come out in past 1 or 2 months relating to ITC. So I think the biggest litigative area in input tax credit right now is GSTR 2A and 3B mismatch. That there is a mismatch in 2A and 3B, and due to that reason, the department is denying ITC. And I think I can say for everyone here, when I say that we have received at least 5 to 10 notices of our clients on this particular issue. Every professional has received at least 5 notices on this issue for all their clients. So now coming to the legal aspects of this topic कि क्या क्या जब भी हमें 2A 3B का नोटिस आता है तो हमें क्या क्या ध्यान रखना होता है. So see, one basic ground always is कि whether it is actually coming in 2A or not. That is one of the most important grounds. But apart from that, what are the legal aspects of this particular issue? What are the finer aspects of this particular issue? For which period department is actually eligible to ask? Department has the right to ask us for the details, and for which period the department does not have that right. So all those things we are going to cover in detail now. So one of the most important aspects we have to see whenever we receive any notice for 2A and 3B mismatch is the exact reason and period. So period is important because this particular law, whether the ITC has to be invoice has to come in GST or 2A or not, that law has changed a lot from day one when it was introduced in July 2017. So from that date till now, the law has changed a lot, and we will be covering that shortly. That in which period, what was the law related to GSTR 2A and 3B matching. So first of all, that becomes most important, that whenever you are receiving a notice, first of all, you have to see for which period the notice is there and relevant provision during that period when for which the notice has been issued, only that law we have to follow. So in a lot of cases, it is possible that if you are receiving notice for 1819, the provisions in 1819 were much more relaxed than what the provisions are now. Or even if we received a notice for COVID period. So during 2020 as well as limited period in 2021, the government also gave some benefits because of the COVID. So for which period the notice has been issued, that is a one of the most important questions we have to see whenever we receive any notice for any issue, but specifically when we receive any notice for ITC. Then what is the exact reason the department has mentioned? So whether the department has only alleged that the ITC is not coming in your GSTR 2A and therefore the ITC is being denied, whether the supplier has not paid the tax, whether supplier has not shown the invoice properly in their GST returns. So what is the exact allegation of the department for denying the ITC? That has to be ascertained because that is how a reply has to be drafted. So it is not that it is a 2A 3B mismatch. So we'll have a standard reply for all the notices we receive for 2A and 3B mismatch. It is not like that. So we have to ascertain the exact reason, exact allegation, which is leveled by the department in their notice, and accordingly we have to draft the reply and see whether actually the reversal has to be made or client should litigate the matter. Then one of the most important point which has to be noted is Rule 36 sub rule 4, which basically talks about 2A and 3B matching. So that particular provision is not applicable on imports and reverse charge mechanism ITC. And this was clarified way back in October 2019 when Rule 36.4 was introduced for the first time. So at that time, immediately circular number 123 by 2019 was issued by CBIC, in which it was clearly mentioned that the matching provisions are only applicable on normal ITC. These are not applicable to imports or RCM. So because we are seeing a lot of cases where the notices are also being issued for imports ITC, that this ITC is not coming in your 2A, but it has been claimed in your GST or 3B. So the first default reply in that case should be that matching is not required in case of imports. So in case of imports, if you have the valid documents, if you have the valid bill of entry along with all the other conditions which are given in section 16 and 17, if those are satisfied, then you can avail the ITC. It is not necessary that the invoice should come in your GST or 2B in case of imports as well as reverse charge mechanism. The next, I think in last 1.5 years, these kind of notices have also increased a lot, wherein department is matching a GST or 2A amount or the GST or 3B amount with table 8A of GSTR 9. So what is table 8A of GSTR 9? So we have a facility of GSTR 2A wherein ITC is being auto-populated. But then in GSTR 9, which is an annual return, table 8A basically is for reconciliation between 3B and 2A. So table 8A auto-populates the figure of GSTR 2A on a consolidated basis for the whole financial year. And in a lot of cases, what has been seen that the figure of table 8A, which is based on GSTR 2A, those doesn't match in themselves. So क्या केस होगा that let's say टेबल जब हम 2A डाउनलोड करेंगे सो इन जीएसटी या 2A आईटीसी आ रहा होगा ₹100 का एंड इफ वी व्हेन वी डाउनलोड टेबल 8A में आईटीसी आ रहा होगा ₹90 का. So even though 8A is made on the basis of 2A, still there can be differences between the figures of 8A and 2A. So in a lot of cases, what is happening? Let's say आपके 2A में ₹100 का ITC आ रहा है. Your 3B is showing ITC of ₹95. So 2A में ज़्यादा credit है, you are eligible for ITC, not a problem. But when you open table 8A of GSTR 9, it is showing ITC of ₹90. So basis on that difference, department is issuing a notice that your table 8A is ITC is coming as ₹90, your 3B is coming as ₹95. So you have excess availed ITC of ₹5, so you have to pay back that amount. So that kind of notices have increased a lot in past 1.5 years. So if we see legally, there is no legal basis for table 8A. There is a normal GSTR 9 return, which is an annual return, but there is no legal basis for auto population of table 8A. So whatever validations, they also keep on updating that, okay, this cutoff date we will take, this cutoff date we will take for auto population of table 8A. There is no such basis mentioned in CGST Act or CGST rules or any of CGST notifications. So any matching based on table 8A of GSTR 9 with GSTR 3B is not at all valid in my view. So any such kind of notice you are receiving, you can instead of table 8A, you can give the figure of GSTR 2A. You can match 3B with 2A and give that reply to department instead of actually matching it with table 8A because of technical issues as well as legal issues. Then COVID period. So this we have already covered that during COVID period. So from Feb 20 to August 2020, as well as from April 21 to June 2021, there was a special relaxation for Rule 36.4. So that 10% limit or 5% limit. So क्या relaxation आई थी basically? That during year 2020, 36.4 had a limit of 10%. कि अगर आपके जीएसटी 2A में 100 रुपीज आते हैं, देन यू कैन क्लेम आईटीसी ऑफ 110 रुपीज, प्रोवाइडेड आपके पास 110 के वैलिड इनवॉइसेज हो. सो 100 से ओवर एंड अबाउट 10 रुपीज आपको अलाउड थे, बट दैट लिमिट वॉज टू बी सीन ऑन मंथ टू मंथ बेसिस in normal cases. But during Feb 20 to August 20, गवर्नमेंट gave a relief कि आप इस पूरे पीरियड के लिए कंसोलिडेटेड बेसिस पे, फ्रॉम फेब 2020 टू अगस्त 2020, consolidated basis पे you can see the 10% limit, and if the ITC is within that limit, then the taxpayer is eligible to avail ITC. And similar relaxation was given during April 2021 to June 2021. So if you're receiving any notice for this period, so this relaxation also you should keep in mind along with other relaxations. So there were a lot of relaxation during this period, even for the interest, even for late fees. So a lot of relaxations were there. So if you're receiving any notice for this period, you have to see the relaxations which are there in this period. Then again, one of the most important questions whenever we are filing GSTR 3B is whether we have to take GSTR 2A or GSTR 2B, because both are auto-populated statements, both are auto-populated on the basis of GSTR 1, both are made available on GST portal. So legally speaking, what is the correct return or what is the correct statement on the basis of which ITC has to be taken? So, my dear friends, first of all, one of the most important thing which has to be noted is GSTR 2B has not been available from day one. Day one, when GST was introduced, only GSTR 2A was available. GSTR 2B was introduced in later on in year 2020 or 21. So for the periods when only 2A was available, obviously we have to take only 2A support. We cannot take 2B because 2B was not available itself. But now the question is, when GSTR 2B also was made available to the assessees. So after that, whether we have to take GSTR 2A or GSTR 2B. So if we see rule 59, 60, 61, which basically talks about GSTR 1, GSTR 2A, 2B and GSTR 3B. So those rules are very simple. They just provide you the normal flow that you have to file GSTR 1 on the basis of GSTR 2A will be auto-populated, GSTR 2B will be auto-populated, and then you have to file GSTR 3B. Then when we come back to rule 36 sub rule 4, which actually says that the ITC has to be taken on the basis of auto-populated data. So earlier when 36.4 was introduced, that rule was silent. 36.4 में सिर्फ इतना लिखा हुआ था that ITC has to be taken on the basis of invoices uploaded in GSTR 1. So invoices जो GSTR 1 में upload होंगे, those will be auto-populated in GSTR 2A as well as 2B. And it was not mentioned in Rule 36.4 that whether you have to take 2A or 2B. So law was completely silent. And it is a cardinal principle of law that if the law is silent, then the taxpayer, then the assessee has the option. So taxpayer has the liberty to choose that option which is more beneficial to him. So in that case, जब तक law silent था, जब तक assessee 2A या 2B, whichever is more beneficial to him, assessee can take that statement 2A or 2B and avail ITC on the basis of that. Then in January 2022, Rule 36.4 was amended, and after that, GSTR 2B was specifically mentioned in Rule 36.4. So after January 2022, we have to take GSTR 2B. There is no confusion in that. But before January 2022, since the law was silent, so in my view, the assessee can take 2A or 2B, whichever is more beneficial to him as per his discretion. Then another issue which we are facing for a lot of our clients is, so let us take an example. There is one invoice which is coming in GSTR 2A, but it is coming late. So let's say the invoice ITC for that invoice was availed in GSTR 3B of April 2019, but that invoice is coming in GSTR 2A of September 2019. So April में 3B में avail कर लिया, but 2A में September में आ रहा है. So in that case, whether any interest is payable, because in a lot of notices we have seen the department is asking for interest for the intervening period. So April की जगह September में आया तो आप 5 महीने का interest pay कर दो. those sort of notices are issued in a lot of cases by the department. So the answer is absolutely no, because nowhere it is mentioned in GST law that the invoice has to come in GST or 2A of that period only. And especially after circular number 183 and 193 has been issued by the department. So circular number 183 is a beneficial circular in which the department has mentioned that in case any invoice is not coming in your GST or 2A, then the recipient can take a declaration from the supplier that the supplier has actually paid tax, and on the basis of that declaration, the demand will be dropped, and even if the ITC is not coming in GST or 2A. So, carrying forward that logic. So, in that case, the department is allowing ITC even if it is not coming in 2A, but they have proved that the tax has been paid. So, in case when I have availed the ITC in GSTR 3B of April 19, but the ITC is coming in 2A in September 19 after 3-4 months. So, in that case, also the invoice has coming in ITC. वो invoice 2A में भी आ चुका है. It is only delayed by a few months because the supplier showed it late. So in that case, I think our case is even on a more strong footing than the case which is given in circular 183. So अगर department 183 में उसका ITC allow कर रहे हैं, then department should definitely allow the ITC in case the ITC is coming late in 2A without any interest, because circular number 183 में भी interest की कोई बात नहीं हुई है. So and even our case is on a stronger footing. So in our case interest का तो कोई question ही नहीं होता. So that is one ground you should definitely argue with the department if the department is asking interest on this particular issue. Then rate of interest, I think more or less now this litigation has been settled. Earlier, that used to be a very big confusion that whether for ITC reversal the interest rate is 18% or 24%. But now the government has amended section 50 subsection 3 with retrospective effect from July 17, and they have provided the interest rate of 18%. So now for any kind of ITC reversal or any kind of output tax liability, if there is a delay in such payment of liability, the interest rate is 18% in all the cases. There is no rate of 24% now in GST law, and that is applicable from day 1, July 2017. Then another very important point. So interest, again, this earlier there used to be a lot of confusion in this point. Now it is by and far clear now that interest is only payable on ITC which is availed and utilized. If the ITC has only been availed, it is lying in the e-credit ledger of the assessee, but it has not been utilized for payment of tax, then there is no interest payment applicable on reversal of such ITC. But now the next point is very important. So this is actually one of the biggest problem area practically a lot of businesses are facing. So let's say a business availed ITC of IGST rupees. IGST में उन्हें 1000 rupees का avail करना था. They availed 1200 by mistake. So they availed an excess ITC of 200 rupees. So after 3 months, 4 months, they realized their mistake and they reversed the ITC. बट जब 3-4 महीने बाद उन्होंने उस आईटीसी को रिवर्स किया, at that time the balance which was available in e-credit ledger, so CGST of 150 was available, IGST of 100 was available, SGST of 100 was available, so total was 350 rupees, and throughout their total balance was about 200. So जिस दिन उन्होंने 200 का एक्सेस अवेल किया, from that date till the date they reversed the ITC, throughout ITC का बैलेंस 200 रुपीज से ज्यादा ही था, बट आईजीएसटी के हेड में नहीं था. कभी वो सीजीएसटी के हेड में ज्यादा था, कभी एसजीएसटी के हेड में ज्यादा था, कभी आईजीएसटी के हेड में ज्यादा था, बट एग्रीगेट बेसिस पे वो 200 से ज्यादा ही था, एंड टिल द डेट ऑफ रिवर्सल. So for this, the government itself has clarified via a circular that whenever you are reversing any excess ITC, you can see the balance of all the available ledgers. So in case of IGST, you can see the balance of C plus I plus S. By extension, if you are reversing CGST ITC, then you can use C plus I, and if you are reversing SGST ITC, then you can use S plus I. यहाँ पे भी आपके वो प्रिंसिपल रहेंगे that CGST and SGST cannot be cross utilized. तो CGST के इंटरेस्ट के लिए SGST का बैलेंस आप कंसिडर नहीं कर सकते. सिमिलरली SGST के इंटरेस्ट के लिए CGST का बैलेंस कंसिडर नहीं कर सकते। Now, this is the chart we were talking about earlier, जो GSTR 2A के different provisions रहे हैं across different points of time. So, financial year 17-18, 18-19, and 19-20 up to 9th October 2019. So, during this time, there was no single provision relating to GSTR 2A. ITC को 2A से लिंक करने का कोई प्रोविजन नहीं था, कोई मार्जिन डिफाइंड नहीं था, nothing was given in the law. So in my view, during that period, the complete ITC could have been availed even if it was not coming in 2A, subject to obviously satisfaction of section 16 and 17. Then from 9th October 19, Rule 36(4) was introduced for the first time, giving a margin of 20%. So 20% margin had to be followed. Then that margin was subsequently reduced. So in 2020, it was reduced to 10%, then it was reduced to 5%. Then from January 2022 onwards, that margin was reduced to 0, and statutory backing of 36(4) was given in CGST Act, by section 16, subsection 2, clause AA. So from January 22, the law is very clear. The ITC has to come in GSTR 2B. Only the ITC which is coming in 2B is eligible. No extra margin is there. But before that, during up to 9th October 19, there was no limit. So ITC could have been availed even if it is not coming in 2B. From October 19 to December 2021, Rule 36(4) was there, but there was no legal provision in the CGST Act to back up 36(4). And on that ground, a lot of writ petitions have also been filed before various high courts throughout India. So that is also a very important legal issue, whether 36(4) was valid before January 22 in absence of a statutory section in CGST Act, which is pending before various high courts. So whenever we receive any judgment on that, then we can take a call. But I think that is a very good point worth arguing. If any of your clients have any significant demand because of 2A 3B matching, they can definitely take this argument in their appeals. And then we also have a very important judgment in the case of Suncraft Energy Private Limited, given by Honorable Calcutta High Court, wherein the Honorable High Court gave a judgment that ITC cannot be denied to the recipient only on the ground that it is not coming in GSTR 2A without investigating the supplier. So in case the department is alleging on a particular client that we want to deny your ITC because it is not coming in your 2A. So the department first has to go to the supplier, investigate the supplier, and in case the supplier is not traceable and there is a connivance proven between supplier and the recipient, only in those cases the department can come back to the recipient and then disallow its ITC. In normal cases, department does not have the power to disallow that ITC. And an SLP was filed against this judgment by the department to the Honorable Supreme Court, which was dismissed by the Supreme Court. So as of now, this judgment holds the ground. This is not law of the land because this was not affirmed by the Supreme Court. It was only the SLP against this judgment was dismissed. So it does not become law of the land. But nevertheless, this is a very, very important judgment. And similar judgment was given in the case of DI agencies by Honorable High Court on the similar principle. So these were not exactly identical, but the principles and the judgments which were given were almost similar. So that concludes our 2A versus 3B mismatch. Now the next most important issue which all the businesses are facing relating to ITC is the retrospective cancellation of their vendors. So for example, Mr. A sold some goods to Mr. B. At that time, everything was okay. दोनों businesses exist करते थे. Mr. A had all the valid documentation. He issued a valid tax invoice. Mr. B received the goods. Mr. B paid through his bank account. All the conditions of section 16 and 17 were satisfied. Later on, the registration of Mr. A was cancelled from retrospective effect. So the department went to Mr. B and said कि आपने Mr. A से एक परचेज की थी April 2019 में. Now we have cancelled the registration of Mr. A with effect from January 19. So Mr. A is now deemed to be unregistered during after any period after January 19th. So April 19 में जब आपने purchase किया, now it is assumed that Mr. A was unregistered during that period and therefore he could not have issued a tax invoice to you. So जो भी आपने उनके tax invoice के base पे ITC लिया है, that is now an invalid ITC which you have to reverse. So this is the broad gist of the issue on which notices are being issued to the assessee by the department. Now, whenever you receive any such kind of notice, so one of the very important things which we have to check is what is the exact allegation of the department. So there can broadly there can be two different type of allegation. First is that there was no goods or services at all. So what will the department say? कि मिस्टर ए एग्जिस्ट ही नहीं करते, मिस्टर ए इज अ नॉन एग्जिस्टेंट बिजनेस, इसीलिए उनका रजिस्ट्रेशन रेट्रोस्पेक्टिवली कैंसिल हुआ है एंड सिंस ही डज नॉट एग्जिस्ट, उन्होंने आपको मिस्टर बी को कोई सप्लाई की ही नहीं, उन्होंने कोई गुड्स या सर्विस सप्लाई ही नहीं की है. सो देयरफॉर दैट वाज अ बोगस इनवॉइस विदाउट एनी एक्चुअल सप्लाई and therefore the ITC is not allowed. And second allegation is a very limited allegation that Mr. A का registration retrospectively cancel हो गया. We don't know the reason why. बस उनका cancellation हो गया. Therefore, he was unregistered during the period when he issued invoice to Mr. B, and therefore Mr. B का ITC deny होगा. So, first of all, we have to identify which is the exact allegation which is leveled by the department. Because if the department is only alleging that Mr. A's registration was cancelled retrospectively and therefore ITC is not eligible, so on that particular ground, we have a lot many judgments from different high courts which are in favor of the assessee that merely because registration of a person is retrospectively cancelled doesn't mean कि आप उनके सारे recipients का सारा ITC deny कर दो. So on that particular ground, the assessee has a very strong case to argue. But if the department is alleging that the business did not exist at all and there was no goods or services, then that becomes a different case because then business has to prove that they had the basic KYC of the supplier at the time of purchase of those goods or services and they have satisfied all the conditions. They have the tax invoice, they have the physical goods or services, they paid through bank account, uh, all those activities have to be proved. So when the basic onus of proving that ITC was validly claimed as discharged by the assessee, then the assessee will be eligible to avail ITC. So that becomes very important that what is the exact allegation of the department and how that has to be encountered. Then again, a very basic point, but very important, that what is the actual effective date of cancellation. So in this example only, let us assume कि मिस्टर बी ने एक इनवॉइस मिस्टर ए ने एक इनवॉइस मिस्टर बी को अप्रैल 19 में इशू किया था, एक इनवॉइस दिसंबर 18 में इशू किया था एंड डिपार्टमेंट कैंसिल द रजिस्ट्रेशन ऑफ मिस्टर ए विद इफेक्ट फ्रॉम जनवरी 2019. सो जो दिसंबर 18 में मिस्टर ए ने बी को इनवॉइस इशू किया था उस इनवॉइस में तो कोई प्रॉब्लम ही नहीं है बिकॉज एट दैट टाइम मिस्टर ए स्टिल रजिस्टर्ड बिकॉज हिज रजिस्ट्रेशन इज कैंसिल फ्रॉम जनवरी 19. सो दिसंबर 18 में ही विल स्टिल बी ट्रीटेड एज अ रजिस्टर्ड पर्सन. So December 18 का जो उनका टैक्स इनवॉइस है, on that particular invoice, Mr. B will be eligible to avail ITC. Because if you practically what happens is whenever department goes to Mr. B, वो देखेंगे कि A का retrospective date से cancel हुआ है, they will pick all invoices of Mr. A and demand calculate the reversal amount. So at that time it becomes very important to check that what is the effective date of cancellation and उससे पहले जितने भी invoices होंगे, those invoices are valid. All the invoices which are issued after the effective date of cancellation, only those invoices should be in dispute. And that should also, based on what is the exact allegation, demand should also be brought for those invoices. The next very important issue, whether goods or services are actually received by the recipient. So yeah, proving this is one of the biggest problem or biggest challenge which are faced by the businesses, that whether goods or services are actually received by them. Because when we see section 16 subsection 2, clause B, it specifically says that the goods or service has to be received by the registered person in order to be eligible to avail ITC. But how to prove? आप इसको कैसे prove कर सकते हो? So if we talk about goods के लिए the basic documents are there. Tax invoice is there, e-way bill is there. But the problem is both of these documents, invoice as well as e-way bill, can be prepared even if there is no actual goods available. So these two documents are not the conclusive documents, and department does not consider them relevant for proving whether there was any actual movement or not. So then department क्या डॉक्यूमेंट देखता है? डिपार्टमेंट देखता है LR, lorry receipt or transporter bilty or consignment note which is issued by the transporter to prove that in fact there was an actual transporter. But that can also be bogus in some cases. So as a business, as a professional, how can you advise a businessman to be completely safe that even if they receive any notice from the department, what documentation can they do to avoid any litigation with the department in this particular aspect, that whether the goods or service were actually received by them? So some common practices which the businesses are following nowadays is one of the first or best practice is if the goods has passed through any toll, so you can take the FASTag receipt, because FASTag receipt is only generated when the goods or when the vehicle moves through the toll. So if you have the FASTag receipt, then that is an conclusive proof that the goods were actually moved from A point to B point and they pass through that toll. Second, whenever any business is receiving any goods, so they are also doing a basic KYC for every receipt of goods. So what they are doing, they are taking pictures that okay, whenever the truck has come, so they will take a picture of the truck with the number plate, with the driver, with the gate closed, and as well as the gate open, wherein the goods are being shown, and all those photos are geotagged. So whenever you have to show to someone, you can show that okay, this picture was taken on this date at this time at this place. So that is also very, very important now. So if the businesses have these kind of documentation, they can avoid the litigation. So I'm not saying that these are the prerequisite to avail ITC or this should be done by every business. But if any business want to avoid any unnecessary litigation with the department, these are the best industry practices which are followed by a lot of companies nowadays to avoid this particular litigation. And similarly for services, so all this discussion was regarding goods. But what about services? Because services are intangible. There is no physical proof for physical movement of services. So in that case, that has to be established through documents. That okay, if any services was actually rendered, then what was the agreement copy, PO copy, how those services were given, if it was a commission service, what were the customers or who were the customers which were introduced by the commission agent, if those were the professional services, what services were actually provided, whether any report was given. So all those documents, all those correspondence can be seen to see whether any services were actually provided or not. Then we have a very good judgment by Honorable Calcutta High Court in case of cargo traders that ITC cannot be denied to genuine buyer if the GST of supplier is cancelled retrospectively, which was also followed recently in the case of Sanchita Kundu by Honorable Calcutta High Court only. And they both relied on the judgment of LGW Industries. Then some other important judgments related to ITC. So we have a very important judgment of Safari Retreats by Honorable Odisha High Court, wherein so as all of you know, the ITC of any goods or services or works contract services relating to construction of a building is blocked unless and until the output supply is also in the same nature. So for the builder, all this construction related ITC is allowed. But any person who is not providing construction or work contract services, the ITC of any goods or services used for construction of a building or any movable property is disallowed. So Safari Retreat, in the case of Safari Retreats, the Honorable Odisha High Court read down the provisions of section 17.5C and 17.5D to say that the ITC will not be blocked when the assessee is using that building to earn an income. So if the assessee is constructing a building and renting it out, so then the assessee is directly earning income from the use of that property. So in that case, the ITC will be eligible. So now this judgment is right now it is pending before the Honorable Supreme Court from quite some time. So we are expecting that a judgment on this will be delivered soon by the Honorable Apex Court. But right now this is the judgment which is there by Odisha High Court. Then next important judgment is by Madras High Court in case of Shanmuga Hardware Electricals, wherein they have said that so in this particular case, what happened is the assessee by mistake they filed a nil GSTR 3B. So in that case, the assessing officer denied the ITC, saying that you did not avail it in GSTR 3B, so it is not a valid ITC now. So you have to pay the gross liability. So in that case, the Honorable High Court held that the ITC cannot be denied only on the ground that it is not reflected in 3B. If other conditions are satisfied, then the assessee is eligible to avail the ITC. Then another other important provisions. So one of the most important provision. So whenever we talk about ITC and we go for the case before the department. So the first provision which they point out is section 155, which says that whenever any person claims that he is eligible for ITC under CGST Act or SGST Act or IGST Act, the burden of proving such claim shall lie on such person. So if the assessee is claiming any ITC, then the assessee is liable to prove that he actually has satisfied all the conditions. Only then he will be eligible to avail the ITC. So using this provision, the department in a lot of cases puts a lot of responsibility on the assessee to prove that the transactions which were made by the assessee, they were genuine, and therefore the assessee is eligible for ITC. So the question which arises is, to what extent the assessee is responsible to prove that he has validly satisfied the conditions? And after what point the burden then shifts onto the department, or it is always on the assessee? So in general law, the burden of proof is always on the person who is accusing. So in this case, the accusations are made by the department. So in normally, whenever the department is making any accusation on the assessee, the department has to discharge the basic burden of proof that these are the reasons, these are the substantiations on basis of which the department is making an accusation. But in case of ITC, that basic burden of proof has been shifted on the assessee. So assessee has to first prove that they have validly availed the ITC, but that is only a basic burden of proof. So if the assessee has satisfied its proof with a basic on a basic level, so they have the basic copy of tax invoice. Tax invoice की उनको copy मिल जाती है. They have the transactions in their bank statement. उनके वो 2A में भी आ रही है, उनके वो GST या 3B में भी उन्होंने वैलिडिटी अवेल किया है, वो सेक्शन 17 में भी फॉलो नहीं करती. एंड दे हैव रीजनेबल प्रूफ रिगार्डिंग द रिसीट ऑफ गुड्स और सर्विस. सो उनके पास इनवॉइस और ई वे बिल के अलावा फोटोज हैं या फास्टैग की रिसीट है या कोई भी एक दो एडिशनल डॉक्यूमेंट्स है टू प्रूव द रिसीट. If they have those documents, then the basic burden of proof has been met by the assessee. Now the burden of proof shifts to department. If department wants to allege that okay, this is not a valid transaction, you have not satisfied all the transactions, all the conditions, then now the burden of proof is on the department and not on the assessee. So ऐसा नहीं है कि as an assessee आपको ही सारी चीजें प्रूव करनी है. The assessee has to give a basic proof. They have to discharge the basic burden. After that, the burden of proof shifts on the department. So for this, we have a very important judgment by Honorable High Court in case of Ecom Gill Coffee. It is not not given under the GST Act, but rather it is given under the Karnataka VAT Act for Section 70. Section 70 of KVAT Act have somewhat similar language to Section 155. It is not an identical language, but it is somewhat similar. So in that case, the Honorable Supreme Court held that the recipient has to discharge the burden of proof regarding the remittance of tax to the seller dealer. So merely producing the invoices or merely showing the bank payment entry in the bank statement, that is not enough. So they have to prove beyond doubt that actual transaction took place. So yes, merely giving the copy of invoice or the e-way bill or bank statement is not enough. The businesses has to have now more documentation some additional documentation to prove that they actually received the goods or services for availing the ITC. So that burden of proof have increased now. So that is something which every business has to keep in mind now whenever they are designing their SOPs for availing the ITC. Then other common issues relating to ITC is common ITC reversal on exempt supplies. So in a lot of cases, even the department is asking reversal on the basis of a lot of amount which is shown as exempt supply, but on which actually reversal is not required. सो फॉर एग्जाम्पल इंटरेस्ट इनकम, अगर किसी बिजनेस को कोई इंटरेस्ट इनकम रिसीव हुई है, सो दैट इज कंसिडर्ड एज एग्जाम सप्लाई इन जीएसटी, बट नो आईटीसी रिवर्सल इज रिक्वायर्ड बिकॉज ऑफ दैट. सिमिलरली अगर कोई स्क्रिप्ट सेल हुई है, so on all those kind of income, ITC reversal is not required. Then e-invoicing. E-invoicing is one of the most important provisions regarding ITC which has come out in last 2-3 years. So e-invoicing के provisions under Rule 48 sub Rule 4, it is clearly mentioned that if a person was required to issue an e-invoice and he does not issue an e-invoice, then the invoice which is issued by him will be treated as an invalid invoice. मतलब अगर मिस्टर ए की टर्नओवर 5 करोड़ से ऊपर है, मिस्टर ए इज रिक्वायर्ड टू इशू एन ई इनवॉइस, बट वो ई इनवॉइस इशू नहीं करते ड्यू टू एनी रीजन, मिस हो गया, गलती से रह गया, सॉफ्टवेयर में ग्लिच था, ड्यू टू एनी रीजन मिस्टर ए डज नॉट इशू एन ई इनवॉइस एंड वो नॉर्मल इनवॉइस इशू कर देते हैं मिस्टर बी को, then Mr. B will not be able to avail ITC on the basis of that invoice because that is not a valid invoice as per Rule 48 sub Rule 4. So that is a very, very important provision which we have to keep in mind now. अभी तक इस पॉइंट पर नोटिस आने स्टार्ट नहीं हुए हैं डिपार्टमेंट से. डिपार्टमेंट इज राइट नाउ ओनली फोकसिंग ऑन द सप्लायर्स हु आर नॉट इशूइंग ई इनवॉइसेस, but mark my words, in coming year or 2 years, the department is going to start issuing notices to the recipients for reversal of ITC in cases when supplier has not issued e-invoicing when they were liable to do so. तो इसको आज ही बिजनेसेस में एसओपीज में चेंज करना पड़ेगा. द बिजनेसेस हैव टू हैव दैट सिस्टम where they will check whether their supplier has whether their supplier are liable to issue e-invoice or not, and if they are liable to issue, they have to issue e-invoice, otherwise the ITC of businesses will be disallowed. Then non-issuance of e-bill. So again, this is a very common query which we are getting from a lot of professionals nowadays and a lot of clients also, that as a recipient, let's say Mr. A sold some goods to Mr. B. Now when Mr. B receives the good, there is no e-way bill with the invoice. Mr. A ने e-way bill generate ही नहीं किया due to some mistake. Now movement has been completed. During movement कुछ intercept नहीं किया किसी officer ने, movement किसी बिना किसी problem के हो गई complete, and Mr. B has received the goods. Now the question is whether in future any problem can come, whether in future the department can come and ask B to reverse the ITC. Or similar issue is there when the e-way bill was expired during the movement of the goods, and the movement of the good got completed on the basis of such expired e-way bill only. So in my view, there is no legal provisions which have any implication for the recipient. The supplier was responsible, if the supplier was responsible for generation of e-way bill and he did not generate it or move the goods on expired e-way bill, the supplier can be levied some penalty, but the recipient has no implication whatsoever. But practically what we are seeing is department is alleging non-receipt of goods in these cases, saying that if there was no e-way bill, there actually no goods were moved. So in that case, again, the businesses have to keep some basic documentation to prove that they actually received the goods from their supplier. So if they are able to prove that they actually received the goods, then in my view, there is no legal implication on recipient in this case. Similarly, next issue is non-filing of 3B by supplier. So the supplier showed the invoices in GSTR1, but he did not file GSTR3B. So in that case, I think the judgment given in Delhi VAT by Honorable Delhi High Court in Arise India, which was later on affirmed in the case of Onquest Merchandising by Honorable Supreme Court. I think that judgment should come in handy, because that judgment, in context of Delhi VAT Act, it clearly held that if the statements are matching, so supplier has shown in GSTR 1, it is coming in GSTR 2 of recipient has shown in 3B. So all the statements are matching, but the tax has not been paid to the government by the supplier, then in that case, the recipient is not responsible. So going by that logic, if the supplier has shown any invoice in GSTR 1, which is coming in GSTR 2 of the recipient, but the supplier has not filed the 3B, then in that case, the liability will be on the supplier and not on the recipient. Then ineligible ITC, which is coming in GSTR 2A. So this is again a very common notices we are seeing in past few days, that in your GSTR 2A, some invoices might be coming for which ITC is ineligible. So maybe some insurance or food and beverages or some other services which is given in section 17(5). So those are coming in GSTR 2A. But let's say the assessee did not avail such ITC in GSTR 3B, because GSTR 3B does not have a invoice wise figure. In GSTR 3B, the aggregate figure has to be reported. So department does not know whether the ITC for that invoice was availed in GSTR 3B or not. So the notices are issued on blanket basis, that these 3 invoices or these 10 invoices are coming in your GSTR 2A for 100 rupees. Please reverse the ITC, because this is an ineligible ITC, without actually checking whether they are in GSTR 3B or not. So in those cases, the assessee has to give a proper purchase register to the department matching with GSTR 3B to prove whether they have actually availed the ITC or not. And if they have actually availed some ineligible ITC, then they have to reverse. Otherwise, there is no need for reversal. Similarly, on commercial credit notes, incentives, ITC reversal is being asked by department in a lot of cases, but which is absolutely not required. So unless and until the supplier issues GST credit note, if the supplier is issuing GST credit note, then the recipient has to reverse ITC. But if the supplier is issuing a commercial credit note or giving some incentive to the recipient, then the recipient is not required to reverse any kind of ITC. Then next, again, important provision, non-payment to vendor within 180 days. So on this particular issue, I think there are a lot of legal issues in this particular provision. So what we are arguing in a lot of cases is that term which is used in section 16 to second proviso to section 16(2) is the term failure to pay. So it is mentioned in that section that when the supplier fails to pay, when the recipient fails to pay tax to the supplier, in that case the ITC has to be reversed. So in case, let's say your payment terms are more than 180 days, the recipient has to pay after 9 months. So in that case, there is no failure to pay within 180 days. So in those kind of situation, this particular provision should not apply. Now moving on to the last part of our session, I think because we are also approaching the end of first half, so we will try to wrap this up quickly. So these are some new amendments which has come, important amendments related to ITC, which has come out in past 2 months. So we will be covering this amendment in brief, and then we will be concluding our session. So first important amendment, this is given in budget number 2. So which came out in 23rd July 2024. So that Finance Act 2022 number 2, they have introduced 2 new subsections in section 16. So earlier there was only 4 sections, 1, 2, 3, 4. Now subsection 5 and subsection 6 has been introduced. So what does subsection 5 say? So this is regarding 16(4), because 16(4) की जो time limit है, that is till September, due date of September of next year. Now it is October of next year. So 30th November basically. Earlier it used to be due date of September. So that is 20th October. So if I take an example, financial year 18-19 के लिए due date to avail ITC was 20th October 2019. So after 20th October 2019, कोई भी ITC related to 2018-19 eligible नहीं था. So what happened practically was, let's say there is some taxpayer Mr. A, उन्होंने मार्च 19 के रिटर्न, मार्च 19 की 3B वो फाइल नहीं कर पाए ड्यू टू एनी रीजन. दे ही डिड नॉट हैव द फंड्स, ही हैड सम अदर प्रॉब्लम ड्यू टू एनी रीजन. मिस्टर ए डिड नॉट फाइल GSTR 3B ऑफ मार्च 19 टिल अक्टूबर. उन्होंने वो 3B दिसंबर 2019 में जाके फाइल की विद द एलिजिबल आईटीसी. सो लेट्स से 100 रुपीज की लायबिलिटी थी, 80 रुपीज का आईटीसी था, तो मिस्टर ए ने 100 रुपीज का आईटीसी दिखाया, सॉरी 100 की लायबिलिटी दिखाई, 80 का आईटीसी दिखाया, 20 रुपीज कैश में पे कर दिया अलॉन्ग विद एप्लीकेबल इंटरेस्ट. नाउ द डिपार्टमेंट कम्स टू मिस्टर ए एंड सेज कि आपने आफ्टर 20th October 2019 वो रिटर्न फाइल की है, सो वट एवर आईटीसी ऑफ 80 रुपीज यू हैव शोन इन दैट रिटर्न, दैट इज नाउ इनएलिजिबल आईटीसी एंड यू हैव टू पे कंप्लीट 100 रुपीज इन कैश. एंड बहुत सारे नोटिस, आई थिंक I was also reading somewhere maybe more than maybe 2 lakhs or 3 lakhs notices has been issued on this particular ground throughout India by the tax department to taxpayers. So to provide relief in the initial years of GST, because initial years में GST में clarity नहीं थी, then 2020 COVID came, जिसमें businesses बंद हो गए थे, so there was a lot of cash crunch also. So to give relief in initial 4 years of GST, the government has now come out with section 16 subsection 5, which has basically extended the time limit for ITC availment. So for financial years 17-18 to 17, 18, 18, 19, 19, 20, 20, 21. The due date to avail ITC is now 30th November 2021. So up to 30th November 2021, कोई भी return file हुई है for these 4 financial years, the ITC is now valid. After this provision is legally notified. So after that, that ITC will be valid, and whatever notices has been issued by the department on this particular issue will be dropped. But they have also issued another section saying if any business has already paid the tax, reverse the ITC, then they will not be given a refund. So this is very important. अगर आपकी किसी क्लाइंट ने अभी they have received a notice and they are deciding whether to reverse or not, so you don't need to reverse. And if you have already reversed but you have the time limit for filing appeal, immediately file an appeal so that your matter is not final. And as and when the notice, this provision is notified, the department will issue a favorable appeal based on the new section. Then another subsection 6 has been introduced in section 16. So what does it say? So this is in case of a cancellation. So I'll take another example to clarify it. So let's say March 19 में Mr. A ने एक cancellation apply कर दिया registration का, because he did not have enough turnover or due to any reason Mr. A ने cancellation apply कर दिया. It was approved by the department. Then after 2 months or 3 months, Mr. A realized that okay, उनको वो registration चाहिए. So he applied for the revocation. That revocation got approved in 2021. 2 साल के बाद जाके वो revocation की application approve हुई. So now the problem is, as soon as the revocation application is approved, now the Mr. A is liable to file returns from March 19 till March 21. Let's say March 21 में approve होती है application. So now Mr. A has to file returns from March 19 to March 21. पूरे 2 साल के returns उन्हें file करनी है. But again the same problem will come. So as soon as he starts filing March 19 return, the due date to avail ITC was 20th October 2019, which has now passed. So if he files the return with valid ITC, the department will again issue a notice to him कि अब तो आपकी time limit जा चुकी है, now you cannot file a return. So for those particular situations, the department has given this relief now that जो भी period का when the order of cancellation was received. So let's say the order of cancellation was received in May 2019. So whatever ITC was for whatever ITC, the time limit was valid सॉरी। सो जो भी इनवॉइसेस की टाइम लिमिट एज पर 16(4) वाज वैलिड ऑन May 19, वो सारे इनवॉइसेस का ईटीसी मार्च 21 में, व्हेन एज सून एज द रेवोकेशन इज अप्रूव्ड, वो इनवॉइसेस का ईटीसी की वैलिडिटी तब तक एक्सटेंड हो गई है। सो वो सारे इनवॉइसेस असेसी मार्च 21 में अवेल कर सकता है, बट दैट इज सब्जेक्ट टू अ कंडीशन that all the returns has to be filed within 30 days from the date of revocation order. So जैसे ही डिपार्टमेंट ने revocation order issue किया, within 30 days the assessee has to file the return to avail this benefit. Otherwise, this benefit will go away. And as per normal 16(4), the assessee has to avail the ITC. तो 16(5) हमने डिस्कस कर लिया, बट 16(5) इज provides a very limited relief that only for financial year 17-18 to 2021, and only if the return is filed up to 30th November 21. So there are a lot of cases which will not be covered in this particular provision. So for that, for those cases, we have some favorable judgment by Madras High Court in case of TVL Cabin, and recently Ranchi High Court also in case of Singh Construction Company, wherein the High Court has held that बिकॉज जीएसटी या 3B, अगर हम वही एग्जांपल लेते हैं कि 100 रुपीज की आउटपुट लाइबिलिटी थी, 80 रुपीज का आईटीसी था, 20 रुपीज की कैश पेमेंट थी, सो लीगली स्पीकिंग असेसी सिर्फ 80 रुपीज के रिटर्न फाइल कर सकता था विदाउट पेइंग द टैक्स अमाउंट। वो 80 रुपीज का आईटीसी अवेल करके 80 रुपीज की आउटपुट लाइबिलिटी पे करके लीगली एज पर सीजीएसटी एक्ट ही वाज अलाउड टू फाइल द रिटर्न। बट व्हेन वी गो टू जीएसटी पोर्टल, जीएसटी पोर्टल आपको रिटर्न फाइल नहीं करने देता जब तक आपकी सारी टैक्स लाइबिलिटी पेड ना हो। सो अनलेस एंड अंटिल दैट 100 रुपीज इज कंप्लीटली पेड, द पोर्टल विल नॉट अलाउ यू टू फाइल द रिटर्न, which is not valid as per GST law.
Uh,
So
Mohit
based
ji,
on this, yes.
I guess it's time to take certain questions of the members. We have certain questions with regard to ITC issues.
So just give me a minute, Manoj, and I'll just wrap it up in 1 minute quickly,
Right.
and then we can take it up. So yes, so वो केसेस में जहाँ सेक्शन 16(5) में कोई केस कवर नहीं होता, वी कैन टेक हेल्प ऑफ दीज जजमेंट्स एंड अवेल द आईटीसी. But these are high court judgments, so obviously these can be challenged before Supreme Court. So we'll have to see if any final Supreme Court judgment comes from this. And then last important amendment. So for RCM cases, let's say some liabilities there for financial year 17-18, which the assessee wants to discharge now. So government has issued a clarification that if the assessee pays that RCM liability in current year and also issues a self invoice in current year, then the assessee is also eligible for ITC of that RCM liability now. So thank you everyone. Manuji, I think now we can move on to the question and answer part.
So I have few questions, Mohit ji. First of all, can you just brief us about the invoice management system which is going to come up? They are rolling out, saying that they are going to roll out in 1st of October. So with regard to how is it helping in the ITC mechanism, ITC taking mechanism? So if you can just enlighten us with that.
Okay, thank you, Manoj. That is indeed a very important question nowadays. So, friends, see the problem with GST 3B was there is no invoice-wise breakup of GST 3B. So they issued a reversal and matching mechanism in 2022 कि जो भी आपके 2B में आएगा उसके बेसिस पे you have to file the return whatever you are not claiming and show it in reverse, temporary reversal, permanent reversal. All that system was there, but there was no invoice-wise breakup. So to overcome that limitation, now they have come up with this invoice management facility, wherein so whenever now the GST 2B is auto-populated. So let's say आपका GST 2B auto-populate हो रहा है and 100 invoices are coming. So now the assessor will have an option to accept, reject or keep pending. So let's say वो 100 invoices में 80 rupees are accepted, 10 invoices are rejected. वो assessor recipient को पता ही नहीं किस चीज के invoices है, so he will reject. And 10 invoices, assessor is not sure whether to accept or reject, so he can keep pending. So he can mark those accept, reject, pending, and basis on those choices, his GST 3B will be auto-populated. So कभी भी फ्यूचर में बैकअप चाहिए होगा कि ये बैकअप क्या था, ये 10,000 रुपीज का, So that can be easily seen by these statement of the assessee. Right now, it is going to be an optional statement, but I feel in future government is going to make it mandatory.
So to brief it up, I guess the government is basically reducing the mismatch related issues in the notices. So because of that, I guess IMS mechanism has come.
Absolutely, absolutely. And even if you see, this was the initial system which was proposed by the government when GSTR 1, 2, and 3 was proposed to be introduced in July 17. That was also more or less on similar lines only.
Right.
So that same system has come with some modifications now.
Right. So one more issue we have is that with the recent in the recent amendment, the government has taken out clarification or mandatory clarification that in case if a person is having multi-state registration, then in that case to distribute the ITC, common ITC, you have to do it through input service distributor mechanism only. So can you just enlighten us upon on that part, sir?
So that is a topic which in itself can take 1 hour to explain. But just to give a very brief overview to our audience, so the problem is, let's say there is a organization which has offices in 10 different states, and they have a head office in Delhi. And in all the states they have taxable supplies, but head office से उनको support function मिलते हैं. So head office has your accounting, finance, marketing, management, all the board of directors, MD, CEO, they are sitting in head office. So those kind of support activities are being done in HO. So GST law says that whatever activities are being done in HO, the ITC has to be distributed. So earlier, the government issued a circular that this ITC can be distributed either through ISD or through raising a cross-charge invoice. But now they have come out with an amendment that from 1st April 2025, all the third-party invoices has to be distributed through ISD only, whatever is the common ITC. And
Right.
whatever internally generated ITC is there, that is again an open question as of now. But that is one activity which businesses have to start doing right now. That what is the common ITC, how much has to be transferred to ISD, whatever what it has to be kept in normal registration. So that activity, if the businesses start now, then they will be able to do it smoothly till March 2025.
Right, right. So one more question we have got from the members, that is it possible to revoke suo motu cancelled GST after more than 2-3 years from cancellation order? What will be the best way for SSC's point of view, whether it should be appeal or apply for a new registration? So SSC want to do a same category of business only.
So as per normal GST provisions, after 2-3 years, you do not have any remedy. But if you have some extraordinary case wherein you have some genuine reasons for not getting the revocation, then you can approach the High Court. And as per their discretion, they can give you the relief. But as per GST law, there is no provision to get the relief.
Right, sir. Sir, one last question for today. There are a lot of expenses we see in our profit and loss account, on which there are certain expenses in which RCM should be applicable. So just to give you a perspective, like ROC fees is there. So there are a lot of questions coming from the department that you have to pay RCM on ROC fees. So what has to be done on such expenses, and how should we take care while we do any kind of an audit, and how can we advise the client on what kind of expenses you need to take care while we are doing an audit or consulting any client?
And I think that is one of the very good questions, because that is something which is avoided, or rather I would say which is not noticed by the lot of businesses. So see, a lot of payments are missed for payment of RCM, and mostly these are government payments. So from 2016 in service tax, this change came. So all the government services now, except some specific services, all other services given by a government are under RCM now. So the implications of this is very, very huge. So all the businesses, whatever government payments they are making, any kind of payment, any kind of fees, challan, taxes, whatever they are paying, there is a chance that RCM is applicable on that payment. So what businesses have to do, they have to list down all the payments which they are making to government, any kind of payment which they are making to government, and they have to analyze whether the RCM is applicable to that or not. So ROC fees is a very good example which Manoj ji has given. So ROC fees, GST is applicable. And I think more than 90% of the businesses do not know that. So legally speaking, ROC fees is a service given by the government. The activity which they do is a service given by the government to the business. So GST is payable on whatever ROC fees is paid by businesses to the government. But government has a blanket limit that any amount below 5,000 is exempt for this government service. So any single ROC fees which is below 5,000, GST is exempt. But any single ROC fees which is more than 5,000, the businesses have to pay RCM on that amount. So
Right.
similarly, all the government payments should be at least once checked by all the businesses.
So I would now like to give a heartfelt thank to the esteemed speaker, CA Mohit Gupta ji, for sharing his valuable insight about the topic. I guess we have got a lot of insight in this regard. I would like to thank CMIB committee also for organizing such kind of a webinar and providing opportunity to moderate and providing me the opportunity to moderate the session. So thank you all. So I would like to hand over to the next speaker and moderator for the next session. Thank you.
Thank you,
Thank
CA
you,
Manoj
everyone.
Garg. Hi everyone, I'm CA Malvika J. Maini, and now we'll be taking the session ahead by talking about show cause notice under section 73 and 74. I would like to introduce the speaker of this session. I would like to introduce Advocate Rajiv Agarwal. He has done chemistry honors from Kirodimal College, Delhi University, and then he completed his LLB from Campus Law Center, Delhi University, and LLM from Kurukshetra University. He founded RA Law Company, a law firm, in 2003 and merged the same with Gravitas Legal and became partner in the said firm. It's a full-service modern law firm having its office at Delhi and Mumbai with a team of about 20 advocates with all modern-day infrastructure and facilities. He is currently holding the position of Additional Standing Counsel, Government of NCT of Delhi since March 2022. He has handled around 1,000 matters on behalf of Department of Trades and Taxes before High Court, dealing with GST, Delhi VAT, and sales tax matter, which includes writs and appeals. He has vast experience in dealing with latest issues pertaining to GST compliances and questions of law. He has over 26 years of practice and consistent appearances in high-stakes matter across all high courts of Delhi, Punjab, Haryana, Chandigarh, NCLT, and district courts of Delhi and Gurgaon, NCDRC and SCDRC Consumer Forum. He has represented various companies, corporate houses, real estate developers, hoteliers, firms, clubs, cooperative societies, charitable societies, hospitals, and trusts before High Court, District Court in disputes relating to commercial contracts, real estate agreements, disputes, insolvency law, franchise agreements, employment disputes, negotiable instrument matters, economic offense, etc. He is impaneled as an arbitrator with the Indian Council of Arbitration, has handled arbitration claims on behalf of PWD and other clients under various provisions of Arbitration and Conciliation Act 1966 before the Honorable High Court of Delhi and arbitral tribunals. He is past Counsel of Government of NCT of Delhi, Rohini Court, DTA, APNC, United India Assurance, UCO, and United Bank of India before district courts. I welcome you, sir. Please, you can proceed with the session. Thank you so much.
Thanks, Malvika. Thanks, Mohit, for the nice and basically precise on the ITC, valid ITC, what should be the and consequences of the non-valid ITC or invalid ITC is the proceedings to be initiated by the department powered by the revenue under section 73 and 74. And recently that has been now changed to 74A, which is yet not notified. I will come to that later on. So to start with, the section 73 and 74, what are these? These are the relevant sections in the chapter 15 of the Central Goods and Services Tax Act, under the heading Demands and Recovery. So why there is a demand and recovery chapters are introduced in every indirect or direct legislation? Because of our system of assessments by the either it was a self-assessment or assessment by the department. Generally, you all are professionals, and we have seen before the GST regime, it was in the DVAT Act or in the Sale Tax Act, in the indirect taxation, there was a mechanism of the assessment done by the department after the filing of the returns for the purpose of refund and for purpose of the assessing the tax and the remands. So that was a mandatory provisions. If that is not done by the department, then the return was deemed to be accepted and the all claims and refunds were deemed to be accepted. But now, as per chapter 12, the return filed by the assessee is deemed to be a valid. Like in chapter 59, every registered person self-assess the tax payable under the act and furnish a return. So return is treated as a self-assessment under as per the section 59. So there is no separate provision for a assessment of each and every return which is to be filed by the assessee. Only some general provisional assessment has been mentioned in the section 16, the chapter chapter 12. Now return is filed. What is the next step which the department has to see? Then in section 61, a provision like in the income tax also, only for the discrepancy, a scrutiny provision is given. That is section 61, scrutiny of returns. I will read 2-3 lines. That the proper officer may scrutinize the return and related particulars furnished by the registered person to verify the correctness of the return and inform of the discrepancy notices, if any, in such manner as he may prescribe and seek an explanation. So under section 61, the department has a right to scrutinize the returns and intimate the discrepancy. And on the basis of discrepancy, there is some demand and the assessee pays that demand. Then there is no further proceedings. But if the discrepancy is not complied with, then the department has a remedy under section 65, 66 of audit and 73 and 75 for the demand and recovery. That is the consequence of the non-compliance of the section 61. Second part. Now we come to the chapter 13. If on the scrutiny of the return, and there is a power given under section 65 to the department to audit by the tax authorities, means the tax commissioner or any officer authorized by him. I will just screen share the relevant section so that Malvika, we are able to see.
Yes, sir.
Thank you. '65. The commissioner or an officer authorized by an general officer or a specific order may undertake audit of any registered person for such period as such frequency in such manner as may be prescribed. So please note that audit can only be done by the tax authorities of a registered person only. There is no provision mentioned in the CGST Act for audit of an unregistered dealer or unregistered person. So that is the condition, foremost condition of the section 65(1). So in case of non-registered person, if there is a violation, there may be an inspection, search and seizure as per 67, but no audit. Audit can be only of the registered person. So on the basis of audit, some information, verification of the accounts can be done, calling for the records and any information which can be collected. So all collection mechanism under 65 is for the collection of the evidence by the department. Now is kindly have section 66, where a special provision has been mentioned, where audit power has been given to start audit from a chartered accountant or cost accountant. For that, there is a certain conditions that has to be met by the department, like if at any stage of scrutiny, inquiry, investigation, or any other proceeding before him, any officer not below the rank of assistant commissioner, having regard to the nature and complexity of the case and interest of the revenue, is of the opinion that the value has been correctly declared or credit availed is not within the normal limit, he may, with the prior approval of the commissioner, direct such a registered person by communication in writing to get his records, including books of account, examined and audited by a chartered accountant or a cost accountant as been nominated by the commissioner. So these all 65 and 66, where power of audit to the tax authorities and special audit through chartered accountant has been given. It is all for collection of the evidence or data for the purpose of ultimately for the purpose of demands and recoveries. For that purpose, a next chapter has been given, which is not today's topic, which is inspection, search, seizure, and arrest. That is chapter 14. By that chapter also, the power has been given to the department for inspection of the premises, search, seizure, and all the things, even for the arrest for the purpose of collection of the information for the purpose for any infractions or allegations which the department see has to be leveled against the SSC. So now straightway culminating by from the chapter 61 to 72, all the data collected by either by scrutiny of return or by audit or by inspection, search, seizure. The same is for the purpose of ascertaining the four factors, that whether any tax has not been paid. Secondly, whether it has been short paid. Thirdly, whether any refund has been erroneously refunded. Fourth, whether any input tax credit has been wrongly availed or utilized. For that purpose, department has made out category 2 till 74A, which has just been introduced from 16th of August. Before that, there are only two sections for that. One is section 73, which deal with where there is no allegations of the fraud or willful misstatement or suppression of facts. Only if there is a bona fide, basically not paid of the tax or erroneously refunded or ITC wrongly covered due to any misinterpretation of the law, then section 73 is applicable. But if during inspection, search, seizure, and audit or any other mechanism, the department is of the opinion that there is any fraud has been committed, or there is any willful misstatement, or there is a suppression of facts, then they issue notice under section 74 of the CGST Act. So these are the two chapters mainly for the demands and recovery. There is a proper mechanism there. Let us deal with this section 73 first, which says section 73(1), where it appears to the professional officer then any tax has not been paid or short paid or erroneously refunded, or where input tax credit has been wrongly availed or utilized. These are only the four parameters. For any reason other than the reason of fraud, misrepresentation, suppression of fact, he shall serve notice on the person chargeable with tax which has not been paid or which has been so short paid, or whom the refund has been erroneously made, or who has wrongly availed or etc., requiring him to show cause why he should not pay the amount specified in the notice, along with the interest payable thereon under section 50, and a penalty leviable under the provisions of the set of the rules made thereunder. So what is the mandatory condition? Mandatory condition is to send a notice under the provisions of section 73. The notice is issued under the form DRC 01 as per the rules, DRC 01. I'm sorry, DRC 01. There is a time limit as per section 73(2). It should be sent 3 months prior to the time limit specified in subsection 10 of the issuance of the order. Subsection 10 of this section says it should, the order under section 73 can only be passed within 3 years. It should be passed within the 3 years of the last date of the filing of the annual return. That is the within 3 years from the due date for the furnishing the annual return. So like for 17-18, the last date for filing of the annual return was 31st December 2018. For 18-19, it was 31st December 2019. For 19-20, so it is generally the last day as per the, I think, last date of the financial year, particular year in the next, after the financial year, that is the 31st December. But due to COVID, from the March 2022 to February 2022, the Supreme Court by courts on its own motion judgment 3 by 2020 has given relaxation to all the departments, to the SSCs, to the dealers, to all litigants, to the courts regarding the strict timelines of the timelines for the filing of the returns, for the filing of refund application. And similarly, relaxation has been given to the department also by way of circular and notifications, by which the time period was extended for the period 2017, 18, 18, 19, 19, 20, because of the COVID extension as per section 168A. So if now the SSC, after the receipt of the notice, has the option to pay the tax and interest. If the SSC, as per his self-ascertainment, pays the tax and interest, then the department founds that the tax ascertained is equivalent to tax paid by the SSC, then the department has to drop the proceedings without levy of the penalty under section 73. That is the mandate as per the section 73, 73(6). Like I will read, the proportion of receipt of such shall not serve any notice under section 1, as the case may be the statement under section 3 in respect of the tax so paid or annuity penalty revised under the rules made thereunder. So, but if the department finds that there is a short payment or not as per the ascertainment done by the department, then the SSC has to file the reply to the queries and the allegations made in the DRC 01, point wise, what are the allegations, and has to reply supported by the documents. Then under section 73(9), the department, after considering the representation and hearings given to the SSC through his consultant, then pass a order under section 73(9), which includes the tax, interest and penalty, which is 10% or 10,000, which is a higher under section 73. So penalty limit under section 73 is only 10%, but the interest is payable under section 50 as per the rules as applicable. So which for the 1719 has almost, which is 18% as per the CGST Act, and for calculation now for 1719, it is almost 100% for the which the notices are coming against the dealers. There is a time limit under section 73, which as I already noted, it is 3 years and which has been extended, and in some of the matters is under challenge because the notification number 9 by 2023 has been challenged in some of the matters before the Delhi High Court and many high courts. But 2 of the high courts in Guwahati and I think Allahabad has given this in the favor of revenue, that department has validly exercised its right of extending the limitation for passing final order for the period 1718 and 1819. Now, for the reference and assistance to my London friends, I'm showing a sample show cause notice, which is issued by the Delhi GST under section 73. Malvika, are we able to see?
Yes, Rajiv, we can see.
Okay, thank you. So this is the DRC 01, which is issued under Rule 102 and 142(1)(a). This is in tabular form, which is generally which is being issued by the Delhi GST, and every state has a different format for issuing the notices. So, Mohit, Gupta ji has already covered all the issues on what basis ITC are denied by the department. So for ready reference for just a couple of minutes, we can see the tables. First table is under declaration of output tax. The tax, so on which basis the department has proposed to raise demand. That is the tax on outward supplies under declared on reconciliation of data in GST as 09. So Mohiji has already apprised you that as a professional, we all should be careful while filing and doing compliances and um, while uploading the data during GSTR 1, 2A, because these are all auto-populated and ultimately this has to be reconciled by the GSTR 09. So if we see from the table, so only on the basis of the different heads like tax on taxable supplies as declared in GST as 09, they have made certain figures. Then they have all the data for the deemed supply, unreturned goods, pending demands. Then by deducting the total tax paid in cash in serial number 7 in first table, tax paid by adjustment of ITC, they have made an allegations that there is a net tax payable against a particular dealer. Then similarly on the second table, on the basis of reconciliation of GST as 01 and 09, they have made certain demands that the outward supplies turnover declared in GST as 01 is greater than the net outward supplies information furnished in GST as 09 and arrived at box 5 and 4G plus 10 minus 11 about this amount is therefore proposed to be taxed as under declared outward supplied as follows. So the department has basically reconciled and by his own ascertainment has made out some infractions against the SSC on the basis of the comparable table of the GSTR 01 and 09. Because outward supplies as shown in GSTR 01 should match with the outwards and all taxation, tax and ITC as shown in the GSTR 09. Then secondly, second table. The second head is ITC, invalid ITC, basically section 16 and section 17. Because section 16 and section 17 are the sections which confer how valid ITC and what are the conditions and parameter which has to be satisfied by the SSC to make out a valid ITC. Like in this table at on the side, like I do in between, under section 75, section 17, subclause 5 of the SGST, input tax credit shall not be available in respect of the list of commodities. So for that SSC, for which a sample DRC 01, for motor vehicle insurance, food and beverages, renting, work contractors, interiors, electrical goods, ITC has been denied. So this SSC has to reply as what is the nature of business and how the motor vehicles, works contractor, interior design, payment to interior designer, payment to electrical goods, paints are essential and for claiming valid ITC for his particular business. So this has to be answered by detailed reply by the SSC. Thirdly, the most important which Moidi has done in detail was the retrospective cancellation and meeting out the condition of section 16(2) mainly. So the allegations made are ITC claimed for cancelled dealers, return defaulters and tax non-payers. So the department only on the basis of section 2C here have made an allegation that every registered person shall be entitled to take credit of ITC on supply of goods or services to him, subject to the condition that the tax charge in respect of such supply has been actually paid to the government either in cash or through utilization of ITC admissible. As rightly pointed out by Mohiji, that earlier in the VAT regime, through Arise India and OnQuest, the court has diluted and read down the provisions of the act at that time of the Delhi VAT regime and has held that if it is the supplier who has to suffer if the purchaser satisfy the three basic conditions, that he has done a valid KYC, the supplier was registered, there is a valid payment, and but now under section 16 in this new GST regime, there is a condition that we have to satisfy that there is a valid receipt of the goods and services. In the first session, Mohit has said, already apprised you what should be the SOPs to establish that goods have been received or services has been rendered by the supplier to the recipient. For that, he has rightly pointed out that toll tax, because invoice, e-way bills, payments, these all three can even be managed by dealers or unscrupulous persons who are dealing in circular trading or in goodless invoices and goodless supply of services uh, business. But because of them only, the genuine dealers are suffering because of such persons who are basically in this circular trading business. So for that, we should advise our dealers and clients should be cautious. Like if today we have organized this webinar, our institute, so there is a communication by WhatsApp, there is a communication by email, there is a phone calls between all the moderators and we the speakers, and there is a complete documentation, or we can say proofs that this webinar is happening. So it is the assessee who has to justify the receipt of the goods by showing some communication, some WhatsApp communication, some email communication with the supplier, rates negotiations, purchase orders, to and from movement of WhatsApp, emails, transport receipt, lorry receipts, toll plaza, weighbridge receipts. So these are the factors which has to be definitely has to be taken care while we are doing business, or the dealers has to be guided in that behalf, that later on, say, because the 7370 proceedings are happening 3 to 4 years down the line of a particular uh, uh, financial year or a business year. So for 4 years, we have to guide them to keep all these correspondences, WhatsApp chat, screenshots, emails in a pen drive or in a hard disk, so that there may be circumstances because of any investigation of any supplier, any other person, third party, because now DGGI has all the powers to investigate all over India. So there may be, because pan India basis, people are now doing business. So this has to be taken care of. As rightly pointed out, Mohit, the burden as per section 155 is on the SSC, but primary burden. So for primary burden also, we have to satisfy something more than which a unscrupulous dealer can also show. So there should be a valid distinction between a valid dealer and a dealer who is dealing in the fake invoices or goodless invoices work. So this is the only ground on which basis the maximum notices are now coming, and which because of there may be cases where there is a genuine transactions, but due to non-continuance of business, due to some other reasons, the dealer could not follow with the department, and its registration has been cancelled retrospectively. So as a department counsel, I'm basically dealing with a lot of matters daily in the Delhi High Court, where people are coming for setting aside their retrospective cancellation because they have done genuine business, and because of retrospective cancellations, their purchasers are not getting the input because of their retrospective cancellation effect. So we can guide them, our dealers, accordingly, and qua the same, and so that they can avail their remedy as per law and as per their own facts and circumstances, qua the retrospective cancellation issues. Because of that only, this ITC claim from cancelled dealers, return defaulters are coming. and the dealer should be advised on that aspect that they should, if they want to close down their business, they should close down the business by filing the valid forms, valid application form, giving the proper details of their inward stocks, capital goods, data, and by complying, filing the returns till the date of cancellation, and pay all taxes. So there is no mismatch to their suppliers, to their purchasers, and to their all the connected parties. So on this basis, these are the notices which we are getting. Department issues and the dealers are getting on the basis of this. So this all has to be replied by proper documentations and proper reply. For the reply purpose, section 75 is the relevant section which has to be considered by we all, and as a consultants and lawyers and chartered accountants, that personal hearing is must, but under section 75(4), an opportunity hearing shall be granted where a request is received in writing from a person chargeable with a tax or penalty, or where an adverse decision is contemplated against such person. So, as a professional, we should advise our client, or we should comply that when we file a reply to the show cause notice, we should also opt for the personal hearing while filing the reply, or by any other mode as per the uh, module on the portal. So that is something I can guide you personally to opt for a personal hearing, because that is must to satisfy revenue or the department regarding your reply and your response to the infractions which has been leveled against a particular SSC and dealer. Now, generally a question comes every time that what should be the number of notices department should send, whether it should be 2, 3 before passing an order. So for that purpose, there is no fix or fixed guideline for the department that they should issue at least 1 reminder, 2 reminder, 3 reminder before passing the impugned order. For that purpose, kindly have I will guide you to section 75(5), where the proper shall, if sufficient cause is shown by the person chargeable with tax, grant time to said person and adjourn the hearing. So, if a dealer is seeking adjournment, then he should, by giving proper letter with a reason that on such and such date I shall not be available, or my consultant should not be available, then the department, the proper officer has been given right to adjourn, but there is a restriction under the proviso of the section 75(5) that it should not be more than 3 times. So we should advise our clients, and we should be careful that we should not take more than 3 adjournments, and there should be a adjournment should be given by the proper officer. We should not leave it to the wisdom of the officer that once we write a letter to the department that please grant an adjournment, and the dealer generally slept over that. We should follow with the department what is the next date of hearing, and when should I come for when my consultant should approach you for giving personal hearing and to apprise you the facts. So this all has to be taken care of by us as a consultant and by dealers also, that adjournments and personal hearing should be done before passing of the impugned order. So now I come to the next section, that is section 74. Section 74 is verbatimly the same as section 73, but the difference is that it is only issued, the notices are issued under this section if there is a fraud, willful misstatement, and suppression of facts, which the department generally gathers either by inspection, search, seizure, and also by audit. So which all powers which has been given, I have just read in section 65, 66, and 67, the powers of audit and inspection has been given to the department. So the department generally by said matters collects the data, and if there is a circular trading, there is a no supply of the goods, generally we are generally seeing the notice issued by the departments under Section 73 are only and only mainly on the basis of the circular trading and invoices without supply of underlying supplying of goods and services. Mainly goods are there. So these are the mandatory conditions to be satisfied, because under Section 75 again, the power has been given to the appellate authority, the tribunals and the courts, to verify whether there was any statement of facts who are the said three aspects of fraud, willful misstatement, and suppression. If these three facts are not there, then the notice shall be treated, or the order made shall be treated as the order under Section 73 only. That is the mandate of the Section 75 too. I will read for your ready reference. Where an appellate authority or appellate tribunal or court concludes that the notice issued under subsection 1 of the Section 74 is not sustainable for the reason that the charges of fraud or any willful misstatement or suppression of the facts to evade tax has not been established against the person to whom the notice was issued, the proper official shall determine the tax payable by such person, deeming as if the notice were issued on subsection 1 of the Section 73. So, as a consultant, we all should deal with this issue while replying to notice under Section 74, whether the department has made out a case to cover the allegations made under these three categories. If these three categories are have not been made out clearly, then we should definitely respond by way of detailed reply that these allegations are not made out, because by further adjudication, either before the adjudicating officer or by appellate authority or tribunal or court, definitely if these allegations are not made out, the dealer or SSC will get the benefit to convert the notice from Section 74 to 73. And there is a major difference between Section 74 and 73. Under Section 73, there is a penalty up to maximum 10% of the tax. But under Section 74, it is 100% of the tax. So penalty is the major ingredient of Section 74 as we compared it with the Section 73. Otherwise, all Section 73 and 74 are similarly worded and similarly placed for that set aspect. Only two aspects are different. If the dealer voluntarily pays the tax amount and 15% of the penalty initially, then the proceedings are deemed to be dropped, and that order is treated as the final order. And after the receipt of the notice, he pays with a 25% penalty, then he also has an option to avoid the further penalty. But if after the final adjudication is done, then he can also pay within 60 days to avoid the penalty of the same. Otherwise, it is 100%. So this is my advice to all of you, to have this aspects noted and take this in your reply. Who are the allegations which has been made qua fraud, willful misstatement and suppression, and House Department is made out a case with respect to the same. And we can definitely take a specific stand that the notice is bad under Section 74 and it should have been under Section 73. Because if that averment is not there in your reply, then as per the settled law, this is a factual averment which has to be taken at the first instance. Otherwise, the appellate court shall be precluded from taking this defense at the later stage of the appellate authority and at the stage of the courts. This is under Section 74. Now, repeatedly a question comes, what is the mandatory requirement of DRC 01A? Whether before issuing DRC 01 and DRC 01 under Section 73 and 74, whether there is a mandatory requirement of issuing DRC 01A, which is as per Rule 142 of the CGST Act, which is called, generally in terms called a pre-consultation, to discuss and to have the demand paid or to get verified the type of intimation that we are proposing this demand, and if anything to say or it matter be closed at that demand. Before around, I think 2020, 15/10/2020, This was a mandatory provision where, because the legislature has used the word shall, but now from 15/10/2020, this shall has been replaced with the word may. So now department is under no obligation, no mandatory obligation to issue DRC 01A, which is a pre-consultation or pre-intimation that a proposed notice under section 70/74 is going to be issued against you. And whatever you want to say at a prima facie stage or initial stage, you can reply and pay the demand. So that is now not a mandatory provisions. So we can't, as a dealer and SSC, as a professional, we can't take shield under the rule 142 of the DRC 01A. That is the important another aspect, which was another aspect while as a council dealing on the department, we generally get the queries from the or the governments or plea by the SSCs that the department has not mandatorily complied with the rule 142 of DRC 01A. So regarding the retrospective effect, there is already a provisions in the CGST Act that the department or the legislature and the GST Council has the power to make any rules and sections with retrospective effect. So 142 rule is a procedural rule. So any plea that it has been made prospectively or retrospectively has no, according to me, has no bearing. And because it is not a substantive thing which has to be mandatorily complied while issuing DRC 01A, DRC 01 under section 73(1) or 74(1). So these are the broad sections, broad parameters of the section 73 and 74. Now, with the latest amendment of 16/8, 2024, these both sections have now been replaced by section 74A. These are generally, these have been combined only, but a time limit has been extended. Now, any notices from the financial year 24/25 onwards can be issued within 42 months. Within 42 months. Earlier, it was 3 months or 6 months prior to the last date of passing an order under section 73, which was 3 years, under 74, which was 5 years. Now it has been collectively made as a 42 months. Within 42 months, that notice has to be issued. And after that, in 1 year, the final adjudication order has to be passed by the department. However, which can be extended by further 6 months. I think according to the till date, I think this provision has not yet notified, but has it already been inserted by the Finance Act to 15 of 2024 with effect from 16/8/2024, which will replace section 73 and 74 from the financial year 2024/25 onwards. So these are the relevant sections 73, 74, 74 and 75 in relation to demand and recovery. Prima facie based on the taxes and ITC, which my London friend Mohit has already covered. To claim valid ITC is a vast, basically, phenomena, and which is developing slowly by judgments from all over India by different high courts on each and every aspects of section 16, section 17, 16(2), how if the supplier has not deposited the tax, what should be repercussions in case of retrospective cancellation, what should be repercussions, and in case of non-supply, what should be the so all is a developing. The CGST law is just developing. We all are just interpreting as per our own knowledge and previous corresponding law of the indirect taxes and the VAT and earlier regimes of a custom and excise. And because there are similar provisions, most of the provisions are similar qua same in respect of assessments and demands and recoveries. I think, Malvika, if any further time left, shall I continue or?
Sir, if you want to conclude, then we can move ahead with the Q&A.
Because ITC, Mohit has already covered.
Yes,
So
sir.
now that is sufficient for the moment under section 73, 74.
Yeah.
If there are any questions, then I can answer that.
Yes, sure, sir. There are a few questions. Firstly, what are the common grounds for issuance of notice under section 73 and 74?
Malvika, that have already priced and show the sample show cause notices.
Yeah.
Like it is a reconciliation between GSTR 0109,
Yes, sir.
is a invalid ITC on account of section 75, invalid ITC on account of violation of section 62, invalid ITC on account of cancelled dealer, retrospective cancelled dealers, non-filing or return by the suppliers.
Yeah.
These are the common grounds on which basis notices are coming in section 73, and under section 74 notices are coming for the circular trading and supply claim of ITC on basis of goodless invoices. That is the main grounds which we are basically getting here.
Yeah. And the other thing, how can businesses mitigate the impact of penalties and interest?
Interest, there is no mitigating factor. Mitigating factor for interest is that dealer should comply with the all provisions of CGST and relevant state GST, DGST or relevant state GST as per the rules, to pay the demands as per times and to pay his dues as per the provisions only. Then interest part can only be saved by that only. Penalty part, I have already priced that if some infractions is apprised by the department, then immediately get consult your chartered accountant and consultant to get it verified, and if it is payable, then pay immediately before the notice so that the penalty can be avoided. So that is the only provision that has been mentioned in 73. And in the 74, penalty is definitely saved if we found that we are at fault, and then pay immediately the tax and interest and 15% penalty, then 95% penalty can be saved and the litigation cost can be saved.
Another question is, sir, how can businesses ensure timely compliance with the notice requirement?
Compliance part I already apprised you. It is notices has to be sent within the stipulated period, that is the 3 months in case prior to 3 months in case of section 73, which is 3 years time limit is there from the date of annual return, and 5-year time is there from the date of annual return in case of section 74. So we have to, after the date of receipt of the notice, we have to start immediately by filing reply, and that I have already apprised you to take adjournment only, and if required, to collect data and information and to consult your chartered accountant and advocate. And it should be replied timely so that a proper officer can basically take note of that and apply his mind, so that it should not be passed on, should not be filed on the very last day, so that there is no opportunity for the officer to apply his mind to your reply.
Thank you so much, sir. Do you want to add anything to this topic, or can we conclude this session, sir?
You are saying to me, Malvika?
Yes, sir. Yes, sir.
No,
Do you want
no.
to add anything?
No, so I have already concluded on the all aspects, and already Mohit has already taken care of that.
Yeah. So I would like to thank CMIB committee for giving me this opportunity to be the moderator. And I would like to thank Rajiv Agarwal, sir. I would like to thank my other moderator and CA Mohit Gupta ji for conducting this session. Thank you so much, all of you, for being part of this session. Thanks a lot.
Thanks to the, I also want to convey my all thanks and great also thanks to the committee to calling me for this session, and thanks to Manoj, you and Mohit for assisting and all cooperation here. Thanks all.
Sir, it was our pleasure that we got to share DIAS with you.
Thanks, Mohit.
Thank you, sir. Thank you very much.
Thank you, Manoj. Thanks.
Thank you, everyone.
नहीं तो मेरा उसी दिन ही ट्रांसफर